Good afternoon, everyone. Happy Wednesday to you all. Ken Shreve with you on TFNN. Welcome to another edition of Breakout Investing. The number to use is toll-free, as usual, 877-927-6648. 877-927-6648. Give me a call. We can talk about this market. Reminder, my show airs daily now on TFNN from 3 to 4 Eastern. You can head over to iTunes if you can't listen to the show live. Download the podcast there, and don't forget you can listen to all TFNN programming on your handheld device, Android device, iPhone, whatever device you have. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. And a usual reminder about Tiger TV on the homepage of tfnn.com. My show is carried live on Channel 1. You can look at charts right along with me with Tiger TV. The show is archived on Channel 13, and Tiger TV is also viewable on your handheld device. All right, let's take a look at the markets here, as we normally start off each show by taking a look at the major averages. NASDAQ composite. Right now, just sort of another wishy-washy, low-volume day in the markets here. The composite right now down about 5.5 points. Call it 0.2% to 3,010 after 3 straight days of gains for the NASDAQ. Overall, not too bad a performance today. So. Composite doing a pretty good job of holding on to its gain the prior 3 sessions. The volume has been picking up as the day has worn on. It had been tracking much lighter than what we saw Tuesday for most of the session. Right now, NASDAQ volume is tracking just a little bit lighter than what we saw on Tuesday. 1.85 billion shares on Tuesday. We're probably going to come in pretty close to that today. Volume on the New York Stock Exchange Tuesday, a little bit below average at 719 million, tracking lower than that today by about 10%, with a little more than 45 minutes left to go in the session. So that's a look at the NASDAQ composite. Really not much happening in that index today. We'll move over, take a look at the S&P 500 here. We'll see pretty much unchanged here, up a fraction to 1401 last on the S&P 500. So both indices doing a good job of holding on to recent gains. And take a look at the Dow here. It is also mostly unchanged, up about 9 points, not even 0.1% to 13,177. So I did yesterday, the media tend to, hit individual investors on a daily basis with negative headlines and kind of doomsday headlines. But I think if you kind of learn to listen to what the market is saying, you're going to be much better off. And, I realize that volume out there is a lack of concern, and a good argument can be made that we're ready to pull back here. But overall, I'm encouraged by the technical picture of the S&P 500 here. It's forming a good base. Again, working on 5 straight weekly gains here for the S&P 500. I'll mention it again. It does bear repeating that as an index, whether it's a stock or an index, as you retest a prior high, sometimes if it's a market that is under meaningful accumulation, which this market is not, at least not yet, but if it's a market under accumulation, you can sometimes see these highs just get taken right out. It's possible that could happen, but I suspect we'll see probably a little shakeout before it happens. So I'm in that camp that I wouldn't be surprised to see a little bit of selling pressure here before a nice move higher for the market into the end of the year. But I try not to make too many predictions like that. I will say right now that the technical picture of the S&P 500 looks pretty bullish. We could, correct 3 to 5% from here, would be, perfectly normal after what looks to be 5 straight weekly gains for the S&P 500. And, a shakeout like that, get the last remaining sellers out of this market, that could pave the way for a breakout. I think I have a chart in here of the NASDAQ composite as well. Weekly chart here. See, the NASDAQ is, tech stocks are still lagging a little bit. A lot of large cap tech names out there, maybe an eBay, an Amazon, an Apple, even a Google. All these large cap tech names really look like they want to get going here, but the problem is there's just no volume in the market. There's no real buying demand in these names. So the charts of all four of the names I just mentioned look pretty good, but they're just kind of lollygagging around, not doing much. Technically still intact, fairly healthy charts, but it takes real buying demand to move these liquid large cap names higher, and they're just the volume's just not there yet. So hopefully it will be soon. But this is a weekly chart of the Nasdaq Composite, also working on the right side of a base here. Still has a ways to go to get to its March-April highs, but trending above its 10-week moving average. So overall, market doesn't look too bad here. Again, expectations, good news has been priced in here. Make no mistake about that. The focus isn't so much on corporate earnings anymore as it is on the European Central Bank and the Federal Reserve. The Fed next meets on September 12th and 13th. We could get a coordinated effort by the ECB and the Fed perhaps in September, maybe even before then, who knows. But that has resulted in improved sentiment in the market, so that's a good thing. Crude oil today was up nicely earlier in the session, but gave back early gains, actually ended lower, down 32 cents. 0.3% to 93.35 a barrel. You can probably see the reversal in the USO here, the United States Oil Fund, which basically tracks the price of West Texas light sweet intermediate crude oil, and you can see the USO hit an intraday high of 35.37. It is now at 34.85, about 15 cents above its low for the day, down 6 cents or so, trading near its session low. Gold up $3.20, 0.2%, not a big move for gold today. The settle is $1,616, 16.16 an ounce. U.S. dollar index recently trading around 82.42. A little bit of strength in the dollar today, but not too much, only up about 21 ticks, 0.3%. U.S. dollar index is still trading below its 50-day moving average at 82.67. And we'll check the U.S. dollar index here. And this is as of Tuesday's close. You can see it closed Tuesday at 82.21, so it's up a little bit today, 82.42, but still below its 50-day moving average. So the dollar is looking a bit tired here. Haven't looked at the currency shares Euro Trust here. You can see the euro has come off its lows, but again, this blue line in the chart here, the 50-day moving average, has been a resistance level for quite some time. It was a resistance level all the way back in late April when it tried to move back above the line. Then it fell from 132 all the way down to about 123, came back up to the 50-day, got turned away, came back up to the 50-day, got turned away. So euro still not in an uptrend here. And we'll see if it's going to be able to continue to rally. If we get weakness in the dollar, stands to reason we could see more buyers come into the euro. But that, strength in the euro, that is still a big question mark at this point, again, due to fairly consistent resistance at the 50-day moving average. Looking at some of these names, it wasn't that long ago when investors were gravitating towards defensive stocks, consumer staple stocks, dividend-paying stocks, and I want to take a look at a name like Kimberly-Clark. Selling pressure has been pretty heavy in this stock recently. Broke below its 50-day moving average. See these red volume bars here? This is what institutional selling looks like, and there's talk that there's some sort of rotation possibly going on. I think it's still too early to say, but definitely some big sellers have been in Kimberly-Clark recently. And when you look at the action overall of some of these defensive consumer staple names and the selling that is starting to build these high-yielding stocks, does that mean that money, perhaps this risk-on trade is going to continue, and names like Amazon and eBay and Apple are eventually going to be able to really get going here? It's certainly possible. I think it's a reason to be optimistic about this market. So a lot of sellers in Kimberly-Clark recently, cuts below its 50-day moving average. Had a call on Altria Group yesterday when I filled in for Tom in the second hour of his show yesterday. Altria could try to firm up at its 50-day moving average here, but there were some big sellers in that stock yesterday as well. Its chart looks better than Kimberly-Clark's, but this is, another high-yielding stock, sort of a defensive stock that was under quite a bit of selling pressure yesterday, and it hit an intraday low today of 34.61, but has bounced, and this could try to find support at its 50-day moving average. Let's take a look at the XLU. This is the Utilities Select Sector Spider ETF, and signs of selling here too. Of course, being a utility fund, another defensive play in the market. You had a big, heavy volume reversal outside day here. Still holding above its 50-day moving average, but the XLU is looking vulnerable here as well. So is this, the utility defensive trade about to end? That's something to keep in mind before you get too bearish. If these types of stocks aren't working anymore, money could continue to find its way into growth stocks. Let's take a look at some story stocks today. I want to start by taking a look at Express Scripts. Very nice earnings report for this company. Express Scripts is a provider of pharmacy benefit management services. This is ESRX. On the NASDAQ, good strong breakout today over 59.50. Good volume in the stock today, clearly under some accumulation. And the thing about Express Scripts is that they did a nice acquisition of Medco Health Solutions earlier this year in April, and so their top line growth was fueled by that acquisition. The acquisition continues to be integrated nicely. Earnings at Express Scripts were up 24% from a year ago to 88 cents a share. Revenue growth 144% growth from a year ago to about 27.7 billion. But again, you've got a good technical breakout here. Starting to see breakouts like this, which is an encouraging sign, but overall I would say it remains a fairly just an inconsistent environment right now for growth stocks. I run the Ultimate Growth Stocks newsletter, manage a model portfolio at TFNN, keep my subscribers up to date on what growth stocks are working in this market. And each day it seems when I go through my screens, there are some good earnings stories in the market, and there are some growth names that are gapping up in price, but it seems like almost every day when I'm looking through my screens, it's very tough to find growth names that are under meaningful accumulation. Now, I will say that Express Scripts today is under accumulation, and this is a good solid breakout, but by and large it's it's as much a stock picker's market in the growth stock universe as it's ever been. So you have to be very, very selective for just as many names that are working. There are plenty of others that are just kind of treading water and not doing a whole lot. I do think they're going to have their day in the sun before this year comes to an end, but that's not going to happen until we see more money start to come in from the sideline, and I'm confident it's going to happen at some point. All right, folks, when we come back, we'll take a look at McDonald's under some pressure today. Priceline, big price destruction in that stock today. We'll talk about a lot of names when we come back. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Talking about a good, strong, heavy volume breakout today in Pharmacy Benefits Manager Express Scripts. News not so good at McDonald's. Dow component weighing on the Dow today, but as we check the markets here, we've turned green again, so that's a good thing. Not out of the question that we could close positive again today. The Dow right now up about 15 points to 13,184. NASDAQ down 3 points to 3,012, and the S&P 500 up just over 1 point to 1402. But inside the Dow, McDonald's, looking at McDonald's in Tiger TV here, down $1.36, trading up near its session high. You know, definitely a broken stock in the market here. A lot of value guys saying, "Hey, pick this thing up at $85 a share." I just have a problem buying a stock that's under so much selling pressure. I just, generally like to, buy momentum. I like to buy when big investors are buying. I certainly don't like to buy when big investors are selling. It seems kind of obvious that would be the way to do it. But hey, a lot of people like to get value in the market, buy low, sell high. Problem is, when you're buying low, sometimes you're buying stuff low that's going to stay low for a while. Big brand here, good dividend yield at McDonald's, and probably a stable enough company where if you've got a 3 to 5 year outlook, getting this thing at $85 probably isn't a bad thing. The question is, are you willing to put up with dead money for a period of time? Because sales trends at McDonald's have been disappointing. That's why the stock has moved from $100 a share down to 87. Global same-store sales were flat in July. That was the news from the company today. Total sales fell 3.2%. Same-store sales were flat. That was, I think expectations were maybe a 2% gain, something like that. U.S. same-store sales fell 0.1%, while Europe dropped a little less than 1%, 0.6%. Asia Pacific, Middle East, and Africa July same-store sales dropped 1.5%. So overall, disappointing sales trends at McDonald's. The stock hit an intraday low of 86.15, but has rallied back close to its session high. Last price 87.65. For McDonald's, still down about 1.5%. Let's take a look at shares of Priceline. We've been talking about Priceline in recent shows as one of these former leaders, definitely looking vulnerable. While you have a lot of growth names that are showing price strength, holding near highs, even some that are breaking out to new highs, Priceline has been consolidating gains, trying to hold its 50-day moving average, but it had turned into a bit of a laggard stock, and this is just a good example. When you see Priceline's consolidation that started here back in May, this is where you definitely had concerns about slowing growth. So the concerns about slowing growth at Priceline have been reflected in the chart for several months now, and it's a good lesson to pay attention to signs of professional selling in a chart when it first starts to arise. But Priceline just having a miserable day today. Getting worse as the day goes on here, down $116.39. That's a 17.1% decline for Priceline. Last price $563.41. Takes out its 200-day moving average with conviction. Boy, this stock is in rough shape here. Top line growth, not bad, up 43% to $7.85 a share. Sales were up 20% to $1.33 billion, but that was a little bit below expectations. The $7.85 a share was about 50 cents above expectations, so good beat on the bottom line, but sales growth came in slightly disappointing. The big problem here is the outlook due to softness in Europe. So that's why the stock is getting hammered today. Read something on Bloomberg today that said almost 59% of the S&P 500 firms which have reported second quarter sales so far have missed analyst estimates. So for 60% of S&P 500 companies have missed revenue estimates. So Priceline, you can add Priceline to that group. Some collateral damage, weak earnings at Priceline negatively impacting shares of TripAdvisor. That stock is underperforming today, down a little more than 5% to 36.67. Big break below the 50-day moving average for TripAdvisor back in July when they reported disappointing earnings, still holding above its 200-day moving average here. And Expedia, stock that was very extended going into today, big gap up on earnings, but still holding above its 50-day moving average. Expedia probably looks like it's ready to base and consolidate gains. I would not chase the stock up here, even though the stock is down a little more than 5% today to 55.77. Still extended in price. All right, folks, headed into the next break. We got about 30 minutes left. 877-927-6648. Long segment coming up. Got plenty of time for a phone call. Give me a call. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing, checking in on shares of Zillow, ticker Z, on the New York Stock Exchange, down 9.5% today, $3.95 to $37.81, trading pretty much at its session low, still holding above its 50-day moving average here. I'll tell you, Zillow was making a case it was going to try to break out here over 44, but company reported earnings last night. In line, 4 cents a share. That's down 33% from a year ago. Maybe the sales growth was a little disappointing. The expectation was for revenue of $27.1 million. They did $27.8, so it was a pretty good beat on the top line. That was sales were up 75% from a year ago, but that was a slowdown from 103% year-over-year growth in the first quarter and 108% year-over-year growth in the fourth quarter. Another thing is that investors have gotten used to Zillow handily beating earnings estimates in the first quarter earlier this year and the fourth quarter of last year. They beat the consensus estimate by a little more than 200%, so they were in line this time around. Probably the biggest deal, though, is that they announced a share offering. Insiders are going to be selling some shares, and that is raising dilution concerns, and the stock is taking a pretty good hit today. I still like the company a lot. I think the management team here is very solid, but technically it is looking questionable at best. So I suspect it's going to be quite a while before we see a new entry point here. We'll keep watching it off and on, but disappointing day for Zillow today after the company reported earnings last night. Some other story stocks here. Starbucks. Let's take a look at shares of Starbucks. This is another name that has been just beaten down mercilessly in recent weeks. Another broken stock here. Shares of Starbucks unchanged today at $45.31. Company invested $25 million in Square. Square is another company of Jack Dorsey, the founder of Twitter. Starbucks will use Square's technology to mobile payment technology to process customer payments in 7,000 of its U.S. stores. Remember, Starbucks has its own mobile payment app that the company launched in January 2011. So Square getting an investment from Starbucks today, and there's talk that Square is going to come public at some point with the amount of money that Square has raised. Its current valuation is at around a little over $3 billion, I believe. So it could be a viable IPO in the mobile payment sector. Let's take a look at Dean Foods as well. DF, this is a stock that had really been beaten up, like many other stocks here. Went from 17 down to about 12, and then you can see this 200-day moving average turned out to be kind of a floor for the stock, and a big gap up for shares of Dean Foods today, up 39.5% to 17.33. Earnings were up 100% from a year ago to 36 cents a share. Sales down 5% to $3.1 billion. The big story here is the company said it's going to spin off its fast-growing unit that sells organic dairy products and soy milk. So an IPO plan for that part of its business, and investors like the sound of that, which is why it is up 39.5% today. Some other interesting earnings reports. Let's take a look at Rackspace Hosting, yet another stock that had been really killed in recent weeks, corrects from 60 down to 40. I mean, just a brutal correction in this stock, but big day for Rackspace today, up 8.8% to 53.65, well off its intraday high of 57.12. In fact, trading near its low for the day right now. But the numbers were pretty good at Rackspace. A lot of shorts had been betting against this company. Big short squeeze today, though, because at the end of April, 7.4 million shares were held short in this name. At the midpoint in July, halfway through July, short interest went from 7.4 million to 13.5 million. So a big jump in short interest recently in shares of Rackspace. Shorts definitely running for cover today. Again, earnings up 38% to 18 cents a share. Sales up 29% to 319 million. This is a cloud computing play, so their cloud computing revenue up 69% from a year ago to 73 million. Company's still getting most of its revenue from its managed hosting services. That was up 21% to 246 million. This stock is not a buy, not in my the playbook that I use, and just working on 1, 2, 3, 4 straight up days here. Not that long ago it was a $44 stock. Now it's up around 53. So certainly not going to chase it up here. And there are some sellers in the stock today because it is well off its highs. Also inside the Dow, Walt Disney. Take a look at shares of Walt Disney real quick here. And this is a stock that was under some selling pressure earlier in the day, hit an intraday low of $49.05. Now it's up 1.1% to $50.36. Disney continues to be a great performer in the Dow. Earnings were up 29% to $1.01 a share. Sales up 4% to $11.1 billion. So good day for Disney. This stock in after hours yesterday was taking a hit, but buyers back in the stock today, and this is a stock that remains under accumulation. Sellers in shares of Jazz Pharmaceuticals today. Take a look at Jazz. Big, kind of a wild day of trading here. Stock down 4.4% to 46.49. Jazz is one of these companies, drug maker, that continues to deliver robust earnings and sales growth. Earnings were up 33%. Sales up in the triple digits again, up 101% to $129.5 million. Xyrem, X-Y-R-E-M. Xyrem is its flagship drug used to treat excessive daytime sleepiness associated with narcolepsy. But sellers in the stock today still holding above its 50-day moving average here, 45.57. But investors not embracing its earnings report today. Continuing on in earnings, Macy's having a good day, outperforming nicely. Still building a base here, back above its 50-day moving average. Stock is up 2.6% today to $37.96. The sales growth kind of tepid, only up 3% from a year ago to $6.1 billion. Earnings up 22% to 67 cents a share. But the company gave a pretty good outlook, so investors like the sound of that, sending shares higher today. Kind of the opposite at Polo Ralph Lauren. Stock is up near its session high after early weakness, still down 1.2% to 151.23. Has recovered nicely after hitting an intraday low of 142.39. But Ralph Lauren's talking about margin pressure, lower revenue guidance, and they came out with earnings that were just so-so. But this is, another technically damaged stock here, really not seeing much in the way of a meaningful uptrend here. Many will say the stock is on sale after its pullback from $180 a share down to, 140 thereabouts, but still looks like a troubled stock to me. Buyers were in shares of SodaStream. You can make your own soda at home. SodaStream, after early strength, trading in the bottom half of its range now. Another stock with a very high short interest here. Soda right now pretty much unchanged on the day, only up 5 cents to 41.30. So disappointing day for longs, despite a pretty good quarter from the company. Another big short interest stock here. Short interest here up 44% since the start of the year to 9.8 million shares. Probably some short covering going on today, but the earnings growth was there again at SodaStream, up 57% from a year ago to 55 cents a share. Sales were up 50%. Nice acceleration from the prior quarter. They did 87.9 million in sales. The company also raised its outlook this year for the second time. And they projected revenue growth of 40% this year, earnings growth of 55%. So a high multiple stock, but hey, still growing the bottom line and top line nicely here. Not my cup of tea, though. Not my cup of. This is a company that tends to trade wildly, a little too volatile for my taste, a little too thin, despite pretty good growth. Take a look at Bloomin' Brands. Boy, this is a company they were supposed to price between $13 and $15 a share. I've been mentioning some of these IPOs this week. Well, they finally priced last night. They were supposed to price between 13 and 15. They actually priced at 11. Normally not a good sign, but maybe they knew what they were doing. The stock was last at $12.37. Up about 12.5% on the day, so not a bad debut for Bloomin' Brands. Of course, they run the Outback Steakhouse chain of restaurants, and they have a couple of other restaurant brands under their belt as well. Other IPOs set to price this week. We mentioned CKE. That's going to trade under the ticker symbol CK, another fast food chain. They own the Carl's Jr. and Hardee's brands. That's expected to price between 14 and 16. Also, Manchester United, the famous UK soccer club, they're supposed to come public this week, priced between 16 and $20 a share. All right, taking a look at some other names on my radar here. HMSY. I know we've been talking about this stock in recent shows. Really like the way this one is trading. I don't own it in the model portfolio, but it does have a lot of qualities I like to see in a stock. HMSY is the ticker symbol here. This is a company that provides cost containment, revenue recovery, benefits coordination to government healthcare programs. They've already come out with earnings. They showed bottom line growth of 35%, top line growth of 34%. Revenue growth has been accelerating in recent quarters. You had a breakout when they reported earnings in July. The swing point was 34.83, and now you've got another swing point that's in play here at 35.98. So if you missed the breakout over 34.83, and here was the breakout day when it broke out over that swing point, you've got another swing point right here, and it looks poised to take out that 35.98. The main issue here is that this is another stock that is really not showing much in the way of accumulation. Okay, working on 5 straight price gains here, no volume at all below average volume price gains, and that just always makes me a little bit nervous. Like the fundamentals at HMS Holdings, I use a combination of fundamental and technical analysis when I evaluate stocks for the model portfolio. Fundamentals have to be there. I'm not interested, in low to mid single-digit earnings and sales growth. I want to see robust earnings and sales increases in recent quarters, and the technical picture has to be intact as well, holding above support, showing relative price strength. HMSY shows all of that. It's another example of a stock with a lot of positive qualities, but just not showing meaningful accumulation at this point. Take a look at another stock here, REGN, Regeneron Pharmaceuticals. Kind of a high-price stock here, but a good base setting up here. Anytime I use the word base, I'm just talking about a period of time where a stock consolidates gains. Okay, so Regeneron's base started here in April. It is starting to retest its prior high here around 145. This is a breakout candidate. I do consider REGN to be a high-quality biotech. It is expected to turn its first annual profit this year. So you've got a series of annual losses at Regeneron, but it is expected to make $2.74 a share this year and $4.27 a share next year. That's up would be up 56%. So you've got great sales increases in recent quarters. When the company announced second quarter results, sales were up 182% to just over $304 million. They develop pharmaceuticals to treat inflammatory diseases, eye diseases, and various types of cancer. So high quality, institutional quality name here that I am watching. I don't have just maybe 1 or 2 healthcare names in the portfolio right now, but nothing in the biotech group, and this is certainly an interesting name. Moving on, let's take a look at I just never know the pronunciation of this name. I believe it's Ixia. It's IXIA. The ticker symbol is XXIA. Okay, Ixia had a nice move in July after reporting earnings. It's holding on to its gains nicely, but another growth name here showing relative price strength that's underperforming the market. This is very typical. A lot of high quality growth names, trading lower when the market's not down that much. Still seeing a lot of stocks down 1-2%. So that's when I say growth not entirely in favor here yet. It is showing signs of life, and some growth names not acting too badly. Others, under some selling pressure after recent price strength. But XXIA, a network testing equipment maker, has some potential here. New CEO in place at Ixia, and holding gains nicely here. All right, folks, headed into the final break. We'll take a look at some earnings reports after the close. When we come back, Ken Shreve with you on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Ken Shreve with you on TFNN as we head into the close here. Not likely the Nasdaq's going to be able to turn positive today, but you never know. It's down 5.5 points right now, 0.2%. Still holding that 3,000 level, 3,010. The Dow still holding above 13,000. And then some. It's up 7 points now to 13,175. And the S&P 500 holding the 1,400 level at 1,402, up less than 1 point. So reasonable performance for the market today after 3 straight days of gains for the major averages. I mentioned volume yesterday in the market, about 720 million shares on the New York Stock Exchange. We're tracking about 10% lower than that today, so very light volume on the NYSE. NASDAQ volume yesterday slightly above average at 1.85 billion. We're going to come in very close to that level today. Certainly today does not have the feel of distribution by any means. Earlier in the program I was mentioning some of these large cap tech names that look like they want to move here, but just kind of biding time, flailing around. Still think Apple's technical picture, light volume notwithstanding, still looks pretty good. It recently broke out over a swing point of 620, but no juice, so low volume breakout. But past 2 sessions you can see here just kind of holding gains, trading tightly. Shares of eBay as well, definitely intact here. This is just a solid company here, holding near highs, really not showing much in the way of selling pressure, and Amazon as well. So 3 large cap tech names here, just not doing a whole lot. Amazon had a big move when it gapped up here on earnings, low volume declines since then. So it seems to me that institutions are kind of sitting tight in their positions here. Take a look at a lot of retail earnings reports coming up, especially next week. Gosh, we've got Home Depot, we've got Target, Walmart, Ross Stores, TJX, whole bunch. Michael Kors is going to be coming out with earnings. This is the popular luxury brand. They're coming out with earnings August 14th, a little less than a week. Earnings expected to be up 11% to 20 cents a share. Sales up 51% to 368 million. Stock, again, still, basing, consolidating gains. Really not sure what to expect here in terms of earnings. I don't think the stock is at a buy here. It has been in rally mode the past 3 sessions, but you can see yesterday hits an intraday high just over 45, reverses, closed near its lows. It's down another 1.1% today to 42.78. And again, earnings next week on August 14th for Michael Kors. Plenty of breakouts out there that are acting well. CAB, Cabela's, this is a retailer that operates outdoor equipment stores. Big move here back in July when they reported earnings, and just a stock that is not giving back any gains at all, still acting very strong in this market. Cabela's, we had a big move for shares of ResMed. Remember ResMed, they sell devices for treating sleep apnea or impaired breathing during sleep. Big gap up here last week, still holding gains nicely as well. So there used to be a time you'd see these heavy volume breakouts and then these nasty reversals and just sellers completely in control. Not that many sellers around in the market right now, which is good. And so we'll see what happens. Coming up after the close, earnings from Continental Resources, CLR, Monster Beverage, MNST, and Tango, TNGO. A couple of gold names reporting too: Yamana Gold, AUY, and Kinross Gold as well. Have a great afternoon, folks. I'll see you back here at 3 o'clock tomorrow for another edition of Breakout Investing.